Are you looking for a short trading strategy that works? If so, you found the right channel. Let's get into it. If you're interested in future videos and when we live stream our scanners, please subscribe, hit the bell notification, and give this video a thumbs up. If you're interested in getting a subscription with Primus software, we have a promo code, seekingtrades, for a big discount. Link in the description. We also have a Discord, so if you're interested, there's a link in the description. Okay, let's get at it. VWAP short strategy. You may have heard it as the VWAP crack, and so forth. Today, what we're going to go over is where you're going to enter your position, the size of your position, so that'll be dictated by your risk versus reward. Stop out areas, that's when you're going to have to stop out and take a loss. Establishing profit targets. So this is when the trade's going and you'll have strategic areas that you're going to be taking profits or downsizing what you have as far as your position goes. And then advanced level adding to a home run, risking to only break even. So as you can see, this is not a right out of the gate type of play, unless you have a hard move really fast up. But this one took a little bit. This is a 5-minute chart. It pushed all the way up. We're acting as if this was that daily support or resistance, which it's resistance in this case. Taps it, comes down, rolls over, comes back, tests VWAP. You need one of these candles to close below. So as you see here, this one closed below. It also bounced a little bit off of this 20 EMA. This is a 20 in the blue and this 9 in the gray. Comes back up, almost takes VWAP, but then the sellers sold off and really pushed it down, and pushed it down hard. Everybody who got long right here in that little support area panicked out, flushed, and it's a pretty nice little trade as far as that goes. And then also you want to watch the volume. So as this comes back up, it's making a lower high, because you come up here, here's your high, here's a lower high, comes down, lower low, lower low, another lower high, and this whole area, once it breaks, look what happened. This support line here, once this broke, it was just right down, bear flag, down, 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 until it finally got some support and started trading sideways and ramping back up. But regardless, that was a good trade. So going back into it, you get in here, and then you basically would not stop out. You'll let the trade work, and if you wanted to not take profit until it passed the 9, then that's up to you. You might take a little bit off right here just in case it starts rolling over for the rest of the day, but ends up trading basically sideways after that for the rest of the day. So that was the initial move, and that was only about 2 hours of the day before it hit the low. So let's talk about risk versus reward. You're going to be risking 1 to win 2 or more. It all depends on how much you're willing to stay in the trade and let it work. So I came across a website that actually had a calculator that you could use to basically show how much you're willing to risk and go through it. So I put in here that we had a $30,000 account. You're willing to risk 1% of your capital, and then you would put in the entry. I said 36.15 is where you're going to enter the trade. You're willing to, you'll risk till 35, 85. You hit compute, and what's going to happen is it'll say how many shares you're allowed to take. That's your max share size. Your position, how much it costs for that trade. Doesn't matter, especially if you have margin. And then risk, you're going to be saying you're risking 30 cents a share at that point, and then it'll tell you how much of the percentage of your portfolio would be risked. So it's 0.83. And then total dollar amount roughly is going to be around $300. I will add the website that I found this calculator on, link in the description. Where to stop out. So we know we initiated our trade here. This is our entry. Well, the top of this decision candle here is our stop. If this thing comes back up, retests VWAP, and continues up and closes above the VWAP, you're most likely going to be stopped out. Getting into a little more advanced level of adding into a trade, into a winner, as the trade plays out. So as this thing pops up here and then continues to go down and roll over, you might find yourself adding into a spot of another pop. So let's just say you thought this was another pop here. Well, as it pops up and then this one immediately flushes down, you can kind of get in here a little more short as it breaks maybe below this 9 EMA. So you're adding to your position a little more. But keep in mind that you're going to keep a trailing stop, or you're going to be mindful that you don't want the trade to go against you. So as you add in with size, hoping that the trade is going to keep flushing and going down all day long, you need to get out at break even, because you've increased your size, which then brings down your cost average. Instead of it being up here, you are now going to be down here, hoping for that big flush and then that big nice trade that you can cover into. One more thing I did want to add. Just because a candle doesn't get above or break through the resistance level of these 9 EMA or 20 EMAs, things like that, the VWAP is basically more powerful than those moving averages. The moving averages are just a little directional deal that kind of indicate which way the stock should be moving. But that VWAP, that's all the math involved and everything as well, but it's a lot more powerful. So respect the VWAP over these EMAs. That pretty much wraps it up. If you guys have any comments or questions, please leave them below and I will get back to you. Hey everybody, so I actually ended up trading the other day and making an example before finalizing the video. So I'm going to show you an example of how this worked. Instead of using a daily resistance level on the daily chart, I just used the pre-market or aftermarket resistance level here at the top, and I drew a line. So intraday trading, I had my 5-minute chart up, and right out of the gate, pretty heavy volume like usual. A lot of traders immediately start trading out the gate. Came up and it slammed kind of right into the standard deviation lines that I have up here, which was nice to see that, because the initial reaction goes into that line, then pulls back. So it did, and then above, like I said, this is that pre-market line or aftermarket line. So this next 5-minute candle came down, closed below VWAP, yellow line's VWAP. Kind of got bought up a little bit, nothing crazy. I watched this other candle, and this was going to be the kind of like, okay, this is going to be my candle I'm going off of. I'll risk. So I'll try to get in right here at 408, and then I'll stop out at 419, 420 area, whatever. Or I could even risk high today because it's so close, but I decided I'd just do above this candle. I took 200 shares short as it popped up and then started to drop down. When it started dropping down, I got in short right there at the bottom of this previous 5-minute candle. Remember, that's our entry. Started going down, hit the 9. I was like, oh boy, let's see if this thing holds the 9. Crushed the next candle right below the 9, the 20, the 50, but this is also in the 5-minute chart, so the 50 I don't feel holds up as well. Goes all the way down, and as it was going down and flushing, I was like, okay, well, I'm already up a dime, or more than a dime. And so I decided to take at $3.94 or so. I covered 100 shares in here, and I was waiting for like the pop. So I drew a line here on the pre-market as kind of a support level. and I didn't want to go into support and have it jump against me too fast. So then in the next 5, 10 minutes, 15 minutes, it curls, comes right back up, right into the 9 and the 20. Those are resistance levels, right? That's all resistance above head here. So I added another 100 shares. So about a dime, which is not much, I mean, considering. I was just taking a small trade just to show the example. I didn't have much time that day. So then it kind of consolidates, goes sideways a bit, and then it kind of dumped down. Once I saw this nice big red candle here go below the 20 and the 9, and I was like, oh yeah, people are freaking out. And then one more new candle opened, and it dumped again. Right to the line here is 384, which is my rough estimate of the support level on the pre-market. I covered 150 shares at 383 and some change. So then I dumped basically 3/4 of my size, which is 150 shares, so I only had 200. And then I put a stop in at that 394 where I added back that 100. So that was going to be a stop out. So then it eventually kind of gets up there and stopped me out the 50 shares I had left. I was just hoping it would just kind of dump a little more, but you know, this wasn't a very big, didn't have very much range. I should have went bigger, but I didn't really have as much time to trade that morning. And I did want to show a good example of what would happen if you did the VWAP crack. So that's it. If you guys have any questions or comments, please leave them down there. I'll try to get back to you. Thank you. If you found any value in this video, please subscribe, hit the bell notification, and give it a thumbs up so others can see this strategy as well. Also, keep in mind we do have a Discord, link in the description. Please join. We have partnered up with Primus and have gotten a promo code, seekingtrades. So if you're interested in getting your own custom scanner, these programmers can make you anything that you want. Thanks for watching the video.